Based on the provided historical and forecast data, the trend for Bitcoin appears to be bearish. The price has been steadily declining over the past 2 weeks, and the forecast suggests continued downward movement in the coming week. Support levels are holding around $67,800, but resistance at $90,600 is proving strong. Considering these factors, a bearish strategy is recommended. A suitable entry point for a short position would be around $88,000, with a stop-loss order placed at $89,900 to limit potential losses. The target price for this trade could be set at $78,000, aiming to capture a significant portion of the anticipated downward movement. Remember to adjust your position size and risk management parameters based on your individual risk tolerance and trading capital. Based on the provided historical and forecast data for Bitcoin Cash, a potential investment strategy emerges. The price shows a clear upward trend, supported by the rising close prices and the forecast suggesting continued growth. The support price at $342 provides a safety net, while the resistance at $424 indicates a potential ceiling. Considering these factors, a long position could be initiated around $345, with a stop-loss order placed at $335 to mitigate risk. The target price could be set at $385, aiming to capture the upward momentum. To further refine this strategy, we can incorporate technical indicators. The RSI is currently hovering around $55, suggesting the asset is neither overbought nor oversold. However, a move above $70 would signal potential overbought conditions, warranting a reassessment of the position. The Bollinger Bands indicate a widening range, suggesting increased volatility. This volatility presents both opportunities and risks, and traders should adjust their position sizing accordingly. Based on the provided data, STRK appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the price falling below key support levels. The forecast data further reinforces this bearish outlook, predicting a continued decline in price over the next week. Considering these factors, a short position is recommended. A suitable entry price for a short position would be around $0.72, which is near the recent high and above the support level. The stop-loss order should be placed at $0.75 to limit potential losses. The target price for this trade is $0.55, based on the forecast data and the downward trend. This strategy utilizes the bearish trend and the RSI indicator, which is currently in oversold territory, indicating potential for further downward movement. Based on the provided data, Ethereum appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, with support holding around $20. The forecast data suggests this downtrend may continue in the coming week. Therefore, a short position strategy is recommended. Enter a short position at the market price around $20. Set a stop-loss order at $20.80 to limit potential losses if the price unexpectedly reverses. The target price for this trade is $18.80, which aligns with the forecast data and represents a potential downside of 8%. This strategy leverages the downtrend and the RSI indicator, which is currently in neutral territory, suggesting potential for further decline. Based on the provided data, XRP appears to be in a sideways trend with a potential for a slight upward movement in the coming week. The historical data shows fluctuations around the support level of $1.54 and the resistance level of $2.27. The RSI indicator suggests that the asset is not overbought or oversold, hovering around the neutral level. A potential long position could be initiated when the price breaks above the resistance level of $2.27, with an entry price around $2.28. A stop-loss order could be placed below the recent support level at $2.15, limiting potential losses. The target price could be set at $2.50, aiming for a 10% gain. This strategy leverages the potential upward momentum and the current sideways trend. Based on the provided data, Binance Coin appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data projects further downward movement. The RSI indicator is also below $50, suggesting bearish sentiment. Therefore, a short position is recommended. A suitable entry price would be around $590, with a stop-loss order placed at $600 to limit potential losses. The target price could be set at $540, aiming to capture a significant portion of the anticipated decline. To further enhance the strategy, we can utilize the Bollinger Bands. As the price approaches the lower band, it indicates a potential oversold condition and a possible rebound. However, given the overall downtrend, the rebound is likely to be short-lived. Therefore, if the price bounces off the lower band, it presents an opportunity to re-enter a short position with a tighter stop-loss order. This approach allows us to capitalize on both the initial downtrend and any potential short-term bounces. Based on the provided data, Stellar appears to be in a downtrend. The historical price data shows a consistent decline, with the forecast data suggesting further downward movement. The RSI indicator is currently below $50, indicating bearish sentiment. The price action has been trading below the $20 day moving average, further supporting the downtrend thesis. Therefore, a short position could be considered. A suitable entry price would be around $0.290, with a stop-loss order placed at $0.300 to limit potential losses. The target price could be set at $0.260, aiming to capture a potential downside move. The RSI indicator suggests that the asset is oversold, which could signal a potential rebound. However, the overall downtrend and the price action below the support level indicate a higher probability of further decline. Therefore, the short position based on the downtrend analysis should take precedence. The Bollinger Bands are also narrowing, which could indicate a potential breakout in either direction. However, given the prevailing downtrend, a breakout to the downside is more likely. This reinforces the rationale for a short position. Based on the provided data, Toncoin appears to be in a downtrend. The historical price data shows a consistent decline, supported by the falling RSI and the price consistently trading below the Bollinger Band center. The forecast data further reinforces this bearish outlook, predicting continued price decline for the next week. Considering this trend, a suitable strategy would be to short Toncoin at the entry price of $2.98, the closing price of March 9th. A stop-loss order should be placed at $3.05, the high of March 9th, limiting potential losses. The target price could be set at $2.44, the forecast low for March 16th, aiming for a potential profit of 54 cents. This strategy leverages the downtrend and utilizes support and resistance levels, as well as the forecast data, to define entry, stop-loss, and target prices. Based on the provided data, Cardano appears to be in a volatile but potentially bullish trend. While the price dipped in the last week of the historical data, the forecast suggests a recovery and upward movement. The RSI indicates potential oversold conditions in the recent past, but has been rising, suggesting a potential shift towards overbought territory. The Bollinger Bands show a widening range, indicating increasing volatility. Therefore, a potential strategy could involve entering a long position at the opening price of March 10, 2025 $0.747. A stop-loss order could be placed at the low of March 9, 2025 $0.724, limiting potential losses. The target price could be set at the resistance level of $0.753, aiming for a modest profit. This strategy leverages the potential for a bullish reversal, but incorporates risk management measures to protect against potential downturns. Based on the provided data, Litecoin appears to be in a downtrend. The historical price action shows a consistent decline, supported by the forecast data predicting further drops. The RSI indicates oversold conditions, suggesting a potential for a short-term bounce. However, the Bollinger Bands show the price trading close to the lower band, indicating a potential for further downward movement. Therefore, a short position is recommended. Enter a short position at the market price around $104. Set a stop-loss order at $107, aiming to limit potential losses. The target price is set at $83.60, the identified support level. This strategy combines the oversold RSI signal with the downtrend and proximity to the lower Bollinger Band, aiming to capitalize on the potential for further price decline. Based on the provided data, Doge-Coin appears to be in a downtrend. The historical prices show a consistent decline, and the forecast data predicts further price drops. The RSI indicator also suggests potential oversold conditions, with values dipping below $30 in the recent past. Therefore, a bearish strategy could be implemented. A potential entry point would be around $2.45, the projected low for March 16th. The stop-loss order should be placed above the recent high of $2.84 to minimize potential losses. The target price could be set at $2.09, the identified support level. This strategy leverages the downtrend and potential oversold conditions to capitalize on potential price declines. Remember, trading cryptocurrencies involves significant risk, and past performance is not indicative of future results. Based on the provided data, Aptos appears to be in an upward trend. The historical price data shows a consistent increase, with the forecast data suggesting continued growth. The support price of $5.45 provides a solid foundation for potential long positions. A long position could be initiated at the entry price of $5.50, with a stop-loss set at $5.45 to minimize potential losses. The target price for this trade could be set at $6.20, the resistance price, aiming to capitalize on the expected upward momentum. Additionally, the RSI indicator suggests potential buying opportunities. When the RSI falls below $20, it indicates an oversold condition, suggesting a potential rebound. The Bollinger Bands can also be used to identify potential price movements. When the price moves towards the lower band, it may signal a potential buy opportunity as the price is considered undervalued. The strategy can be further refined by combining these signals. For example, a long position could be taken when the RSI is below $20 and the price is approaching the lower Bollinger Band. Based on the provided data, SE appears to be in a downtrend. The historical price data shows a consistent decline over the 2 weeks, with the forecast data suggesting this trend will continue. The RSI consistently hovers below $50, indicating bearish sentiment, and the price is trading below the $20 day moving average, further reinforcing the downtrend. Therefore, a short position is recommended. Enter a short position at the market price when the price touches the resistance level of $0.227. Set a stop-loss order at $0.234 to limit potential losses. The target price is $0.184, based on the forecast data and the support level of $0.177. This strategy combines the downtrend analysis, RSI indicator, and price action at key levels to generate a potential high-return investment opportunity. Based on the provided data, Ethereum Classic appears to be in a slight uptrend. The historical price data shows a general upward movement, with the price closing above the support level of $17.30 on most days. The forecast data also suggests a continuation of this upward trend, although with a slight decline in the coming week. Therefore, a long position strategy could be considered. A potential entry price would be around $17.90, the forecast price for March 10th. The stop-loss order should be placed below the support level at $17.30. The target price could be set at $20.40, the highest forecast price for the next week. This strategy utilizes the potential for an upward price movement while managing risk by setting a stop-loss order below the support level. Based on the provided data, Polygon appears to be in a downtrend. The historical price data shows a general decline, and the forecast data predicts further downward movement. The RSI indicator, while showing some fluctuations, remains below $50, suggesting bearish sentiment. The Bollinger Bands are contracting, indicating a potential for a breakout in either direction. However, given the prevailing downtrend, a breakout to the downside seems more likely. Therefore, a bearish position could be considered. A suitable entry price would be around $0.225, a level below the forecast lows and a recent support. A stop-loss order should be placed above the recent high, around $0.245, to limit potential losses. The target price could be set at $0.195, a significant support level based on historical price action. This strategy utilizes the bearish trend, the RSI indicator, and the potential for a downside breakout. Based on the provided data, AEVO shows a potential downward trend. The price has been declining since March 9, $2,025, and the forecast predicts further decreases. The RSI, while fluctuating, remains below $50, indicating a bearish sentiment. The Bollinger Bands also suggest a downtrend, with the price consistently trading below the middle band and approaching the lower band. Considering these factors, a short position is recommended. A suitable entry price would be around $0.130, the current price level. The stop-loss should be placed above the recent high at $0.139 to limit potential losses. The target price could be set at $0.100, aligning with the lower end of the predicted price range. This strategy capitalizes on the bearish momentum and aims to profit from the anticipated price decline. Based on the provided data, optimism appears to be in a downtrend. The historical price data shows a general decline, with the forecast data suggesting further price drops. The RSI indicator remains below $50, indicating bearish sentiment. The Bollinger Bands are narrowing, suggesting a potential for a breakout in either direction, but the overall trend points downwards. Considering these factors, a short position could be taken. An entry price of $0.989 could be considered, with a stop-loss order placed at $0.956, the support level, to limit potential losses. The target price could be set at $0.834, based on the forecast data. Based on the provided data, STRK appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the forecast data suggesting further downward movement in the coming week. The RSI is consistently below $50, indicating bearish sentiment. The price action is also consistently trading below the $20 day moving average, further confirming the downtrend. A good entry point for a short position would be at the current market price of $0.155, with a stop-loss placed at $0.162, above the recent high, and a target price of $0.139, based on the forecast data. While the Bollinger Bands show a narrowing range, indicating potential for a breakout in either direction, the overall trend and RSI suggest a higher probability of a downward break. Therefore, focusing on a short position based on the downtrend and RSI signals appears to be the most efficient strategy. This strategy combines the insights from trend analysis, RSI, and the Bollinger Bands, aiming to capitalize on the potential for further price decline in STRK. Based on the provided data, Solana appears to be in a downtrend. The historical price data shows a general decline, with the forecast data predicting further drops. The RSI is below $50, indicating bearish sentiment. The price is consistently trading below the resistance level of $131, further supporting the downtrend. A good entry point would be around $125, the projected low for the upcoming week. A stop-loss order should be placed at $120 to limit potential losses. The target price could be set at $110, aligning with the predicted price decline. An RSI-based strategy suggests a long position when the RSI falls below $20, indicating oversold conditions. However, the current RSI levels are already below $30, suggesting the market may be oversold. The Bollinger Band strategy indicates potential buying opportunities when the price touches the lower band. While the price is approaching the lower band, the overall downtrend suggests caution. The most efficient strategy appears to be a combination of the downtrend analysis and the RSI strategy, with an entry point around $125, a stop-loss at $120, and a target price of $110. Based on the provided historical and forecast data for Jupiter, a bearish trend is evident. The price has been consistently declining over the past 2 weeks, and the forecast predicts further downward movement. The support and resistance levels also indicate a bearish bias, with the resistance price at $0.504 and the support price at $0.469. Therefore, a short position is recommended. Enter a short position at the market price when the RSI dips below $20, indicating an oversold condition. Set a stop-loss order at $0.504, slightly above the resistance level, to limit potential losses. The target price is set at $0.469, the support level, aiming to capture the potential downside movement. Additionally, consider exiting the position if the price bounces back above the Bollinger Band's middle line, suggesting a potential reversal in the trend. Based on the provided historical and forecast data for render, a potential investment strategy could be implemented. The price trend appears to be generally downward, with a significant drop anticipated in the coming week. A short position could be considered, aiming to capitalize on this anticipated decline. A suitable entry price for a short position would be around $3.10, the forecasted price for March 10th. A stop-loss order could be placed at $3.20 to limit potential losses. The target price for this trade could be set at $2.67, the forecasted price for March 16th, reflecting the anticipated downward trend. This strategy leverages the expected price decline and utilizes stop-loss and target orders to manage risk and potential profits. The analysis of Solana Name Services historical data suggests a potential downtrend in the coming week. The price has been generally declining since February 24th, and the forecast data further reinforces this bearish outlook. Considering the support and resistance levels, a potential entry point could be around $0.105, the lower boundary of the Bollinger Bands and a level that coincides with the oversold RSI reading. A stop-loss order should be placed at $0.102 to limit potential losses. The initial target price could be set at $0.095, aligning with the forecast data and the lower Bollinger Band. The RSI strategy suggests a buy opportunity when the RSI dips below $20, indicating an oversold condition. This aligns with the current situation, as the RSI has been hovering around $30. However, the bearish trend indicated by the price action and the forecast data should be taken into consideration. Therefore, a cautious approach is recommended, entering a long position only if the price rebounds from the support level of $0.105 and confirms a bullish reversal pattern. The Bollinger Band strategy suggests buying when the price bounces back towards the middle band, indicating a potential reversal. This strategy, combined with the RSI and price action analysis, provides a more robust and balanced approach to trading Solana Name Service in the coming week. Based on the provided data, a potential investment strategy for Doge-Coin emerges. The historical price trend shows a downward movement, supported by the forecast data indicating further price decline. The RSI, currently below $30, suggests potential oversold conditions, signaling a possible short-term bounce. However, the Bollinger Bands indicate a potential continuation of the downtrend as prices remain below the middle band. Therefore, a cautious short position could be considered. Enter a short position at $0.198, the closing price on March 9th, with a stop-loss order set at $0.205, slightly above the recent resistance level. The target price could be set at $0.147, the lowest forecast price within the given timeframe. This strategy capitalizes on the potential for further price decline while managing risk with a well-defined stop-loss order. Based on the provided historical and forecast data for PEPE, a potential investment strategy could be implemented. The trend analysis suggests a downward movement in price, with the forecast data indicating a continued decline. The support and resistance levels highlight a key support zone around $0.000000540 and a resistance level at $0.000000670. A long position could be considered if the price dips below the support level of $0.000000540. The entry price would be set at $0.000000540, with a stop-loss order placed at $0.0000530 to limit potential losses. The target price could be set at $0.000000670, representing a potential profit of approximately 24%. This strategy incorporates the support level as a potential entry point and utilizes the RSI indicator, which suggests a potential oversold condition. The stop-loss order provides a safety net, while the target price aims for a significant profit. Based on the provided historical and forecast data for SHIB, a potential investment strategy can be formulated. The price trend shows a general downward movement, with a forecast suggesting further decline in the coming week. Considering the support and resistance levels, a potential entry point could be around $0.0000118, slightly above the forecast low of $0.0000117. A stop-loss order should be placed at $0.0000117 to limit potential losses if the price continues to decline. The target price could be set at $0.0000105, aiming for a 10% gain based on the current forecast. The RSI indicator suggests that the asset is currently in oversold territory, potentially indicating a potential rebound. However, the Bollinger Bands show that the price is trading below the middle band and approaching the lower band, suggesting continued downward pressure. Combining these indicators, a cautious approach is recommended, entering the position with a tight stop-loss and a moderate target price. Monitoring the RSI and Bollinger Bands closely will be crucial for managing the position and potentially adjusting the stop-loss or target price as the situation evolves. Based on the provided historical and forecast data for Dog with Hat, a potential investment strategy emerges. The price has shown a downtrend in recent weeks, with the forecast projecting further decline. Considering this, a short position could be considered. A suitable entry point would be around $0.540, near the bottom of the Bollinger Bands and a historical support level. To manage risk, a stop-loss order should be placed at $0.560, above the recent swing high. The target price for this trade could be set at $0.400, aligning with the forecast low and representing a potential 25% profit. This strategy leverages the bearish trend and uses technical indicators to identify potential entry and exit points. Remember that this is just a suggestion and further research and risk assessment are always recommended before making any investment decisions. Based on the provided data, the Doge-Coin price shows a potential downtrend. The forecast data suggests a continued decline over the next week. The RSI indicator, while currently above $20, is trending downwards, indicating potential oversold conditions in the near future. The Bollinger Bands show price action contracting, suggesting a potential breakout in either direction. Therefore, a strategy could involve waiting for a pullback towards the lower Bollinger Band, with an entry price around $0.00213. A stop-loss order should be placed at $0.00208, slightly below the predicted lows. The target price could be set at $0.00173, based on the historical support levels and the forecast price trajectory. This strategy aims to capitalize on the potential downtrend while managing risk with a defined stop-loss. Based on the provided data, Near Protocol appears to be in a downtrend. The historical price data shows a consistent decline, with the price falling below the support level of $2.82 on several occasions. The forecast data further reinforces this bearish outlook, predicting a continued decline in price over the next week. Considering these factors, a short position strategy is recommended. Enter a short position at the market price around $2.93. Set a stop-loss order at $3 to limit potential losses. The target price for this trade is $2.55, based on the forecast data and the historical price action. This strategy utilizes the downtrend and the support level as key indicators. It also incorporates the forecast data to identify a potential target price. Based on the historical and forecast data, Internet Computer appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, and the forecast suggests further downward movement in the coming week. The support price of $4.72 provides a potential floor for the price, while the resistance price of $6.14 acts as a ceiling. Considering this trend, a short position could be considered. A suitable entry price for a short position would be around $6.07, which is slightly above the recent low and the current support level. A stop-loss order should be placed at $6.14, above the resistance level, to limit potential losses. The target price for this trade could be $5.51, aligning with the forecast price for the first day of the following week. This strategy utilizes the identified trend and forecast data to capitalize on a potential price decline. Based on the provided data, Injective appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data predicts further price drops. The RSI indicator, while fluctuating, remains below $50, suggesting bearish sentiment. Additionally, the price is consistently trading below the resistance level of $13.50, further reinforcing the downtrend. Therefore, a short position strategy is recommended. Enter a short position at the market price around $10.10, based on the first forecast price. Set a stop-loss order at $9.74, the lowest price in the historical data, to limit potential losses. The target price for this trade is $7.81, the historical support price, aiming for a profit of approximately 23%. This strategy utilizes the downtrend, RSI indication, and support level to identify a potential high return opportunity. Based on the provided data, BTC appears to be in a downtrend. Historical prices show a consistent decline, and the forecast data predicts further downward movement. The RSI is consistently below $50, indicating bearish sentiment. The Bollinger Bands are also narrowing, suggesting a potential for a breakout in either direction. However, given the prevailing downtrend, a breakout downwards is more likely. Considering these factors, a short position strategy is recommended. Enter a short position at the current market price of $275. Set a stop-loss order at $288, which is the recent high and a potential resistance level. The target price is $216, which is the strong support level and the bottom of the Bollinger Bands. This strategy aims to capitalize on the expected continuation of the downtrend. Based on the provided data, THETA network appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests this trend will continue. The RSI indicator also supports this view, with values consistently below $50, indicating bearish sentiment. The Bollinger Bands show price action contracting, suggesting a potential for a further downward move. Therefore, a short position could be considered. A suitable entry price would be around $0.898, the forecast price for March 10th. A stop-loss order should be placed at $0.947, the resistance level, to limit potential losses. The initial target price could be set at $0.805, the forecast price for March 14th, representing a potential profit of around 10%. Based on the provided data, WorldCoin appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the price falling from $1.06 to $0.794. The forecast data also predicts a further decline in price over the next week. Considering this trend, a bearish strategy is recommended. A suitable entry point for a short position would be around $0.80, with a stop-loss order placed at $0.83 to limit potential losses. The target price could be set at $0.65, aiming to capture a significant portion of the anticipated decline. This strategy utilizes the downward trend and the RSI indicator, which has been consistently below $30, indicating oversold conditions. The Bollinger Bands also support this bearish outlook, with the price trading below the middle band and the lower band narrowing, suggesting a potential for further downward movement. Based on the provided data, Hooked Protocol appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data predicts further price drops. The RSI indicator also supports this bearish outlook, hovering below the $50 level for most of the period and suggesting a lack of buying pressure. Considering these factors, a short position is recommended. The entry price for the short position should be around $0.172, the closing price on March 9th. The stop-loss order should be placed at $0.187, the high of March 9th, to limit potential losses. The target price for this trade is $0.128, the predicted price for March 15th. This target price is based on the forecast data and the overall downtrend observed in the price action. Based on the provided data, Artificial Superintelligence Alliance appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data predicts further price drops. The RSI indicator is hovering around oversold levels, suggesting potential buying opportunities. However, the Bollinger Bands indicate a narrowing range, suggesting a potential for increased volatility. A potential strategy could involve entering a long position when the price touches the support level of $0.504, with a stop-loss order placed below the recent lows around $0.487. The target price could be set at the resistance level of $0.543, aiming for a potential upside of 7%. This strategy combines the oversold RSI signal with the support level, aiming to capitalize on a potential rebound. The stop-loss order protects against further downside risk, while the target price provides a clear profit objective. Based on the provided data, Polkadot appears to be in a downtrend. The historical price data shows a general decline over the past 2 weeks, and the forecast data predicts further downward movement. The RSI indicator is currently below $50, suggesting bearish sentiment. The Bollinger Bands are also narrowing, indicating a potential for a breakout in either direction, but the overall trend suggests a downside move. Therefore, a suitable strategy would be to sell Polkadot at the current market price of approximately $4.43. The stop-loss order should be placed at $4.53, slightly above the recent high. The target price could be set at $3.94, which aligns with the lowest forecast price for the upcoming week. This strategy leverages the downtrend and bearish sentiment indicated by the technical indicators. Based on the provided data, Filecoin appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, with the forecast data suggesting further downward movement. The RSI indicator is also below $50, indicating bearish sentiment. A potential entry point could be at the support level of $2.78, which aligns with the forecast price for March 10th. A stop-loss order should be placed below this support level, around $2.70, to limit potential losses. The initial target price could be set at the next resistance level, which is currently around $2.90. However, it's important to note that the Bollinger Bands are relatively compressed, suggesting a potential for a breakout in either direction. If the price breaks above the upper Bollinger Band, it could signal a reversal in the downtrend. In this case, a long position could be considered with an entry price at the breakout point, a stop-loss below the recent swing low, and a target price at the next resistance level. Ultimately, the best strategy will depend on the individual trader's risk tolerance and market outlook. Based on the provided data, Conflux appears to be in a downtrend. The historical price data shows a consistent decline, with the price falling below support levels and failing to break through resistance. The forecast data further suggests this downtrend will continue, with prices predicted to drop below 9 cents dollars. Considering this, a bearish position strategy is recommended. Enter a short position at the market price around $0.0995. Set a stop-loss order at $0.102, which is the recent resistance level. The target price for this trade is $0.081, based on the historical low and the forecast data. This strategy capitalizes on the downtrend while mitigating potential losses with a tight stop-loss order. Based on the provided historical and forecast data, Ethereum name service appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, with the forecast suggesting further downward movement in the coming week. The support price of $15.80 provides a potential floor for the price, while the resistance price of $19.40 acts as a ceiling. Considering these factors, a bearish strategy could be implemented. A potential entry point for a short position could be around $20.20, the recent low. The stop-loss order should be placed above the recent swing high at $21.10 to limit potential losses. The target price could be set at $15.80, the identified support level. This strategy leverages the downtrend and aims to profit from the anticipated price decline. Based on the provided data, Avalanche appears to be in a downtrend. The price has been consistently decreasing over the past 2 weeks, and the forecast suggests a continuation of this trend. The RSI indicator is hovering around $33 to $40, indicating that the asset is not oversold. However, the Bollinger Bands show that the price is moving closer to the lower band, suggesting a potential for further downward movement. Therefore, a bearish strategy is recommended. Enter a short position at the market price on March $10, $2025, when the forecast price is $18.20. Set a stop-loss order at $19 to limit potential losses. The target price for this trade is $16, based on the forecast data and the downtrend. This strategy utilizes the bearish trend and the potential for further price decline indicated by the Bollinger Bands. Based on the provided data, Bitcoin appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data further suggests a continuation of this downward movement. The RSI, while fluctuating, remains below the overbought level, indicating that the asset is not currently overvalued. However, the RSI is also not in oversold territory, suggesting that there might not be a strong buying opportunity at this time. Considering the Bollinger Bands, Bitcoin has been trading below the middle band for the past 2 weeks, indicating a potential for further downward movement. A potential entry point could be around the support level of $0.023. The stop-loss order should be placed below the recent low of $0.0246 to minimize potential losses. The target price could be set at the next significant support level, which could be around $0.0217. This strategy focuses on capitalizing on the existing downtrend while managing risk effectively. Based on the provided data, PENDLE appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data predicts further price drops. The RSI indicator is hovering below $40, suggesting oversold conditions. However, the Bollinger Bands indicate a potential for further downside movement as the price is approaching the lower band. Considering these factors, a short position could be initiated with an entry price at $2.45, the current market price. The stop-loss order should be placed at $2.52, slightly above the recent high to minimize potential losses. The target price could be set at $1.99, the predicted low for the week based on the forecast data. This strategy leverages the downtrend, oversold conditions, and potential for further price decline predicted by the Bollinger Bands. Based on the provided data, the sandbox appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data predicts further price drops. The RSI indicator is hovering around oversold levels, suggesting potential for a short-term bounce. However, the Bollinger Bands are contracting, indicating a potential for a breakout in either direction. A conservative strategy would be to enter a short position at the next price spike above the current support level of 26 cents dollars, with a stop-loss placed at 27 cents dollars. The target price would be 23 cents dollars, based on the forecast data. This strategy leverages the downtrend and the potential for a breakout to the downside. Based on the provided data, Decentraland appears to be in a downtrend. The historical price data shows a consistent decline, with the price falling below its support level of $0.248 on multiple occasions. The forecast data further suggests a continuation of this downtrend, with prices projected to decrease over the next week. Considering these factors, a bearish strategy is recommended. A potential entry point could be around $0.257, near the recent low and the predicted low on March 10th. The stop-loss order should be placed above the recent high of $0.296 to minimize potential losses. The target price could be set at $0.234, aligning with the predicted low on March 16th. This strategy aims to capitalize on the expected downtrend in Decentraland. Based on the provided data, ENG coin appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data predicts further price decreases. The RSI indicator also supports this bearish outlook, hovering below the overbought level for most of the period. Considering these factors, a short position strategy is recommended. We can enter a short position at the market price around $0.105. The stop-loss order should be placed above the recent resistance level, which is around $0.112. The target price can be set at the support level identified in the forecast data, which is around $0.085. This strategy aims to capitalize on the potential further decline in ENG coin price. Based on the provided data, Uniswap appears to be in a downtrend. The historical price data shows a consistent decline, with the forecast data projecting further downward movement. The RSI indicator is mostly below $50, indicating bearish sentiment. The Bollinger Bands are contracting, suggesting a potential for a break in either direction. We will initiate a short position when the price breaks below the support level of $5.61. The entry price will be $5.60, with a stop-loss order placed at $5.75 to limit potential losses. Our target price is $5.25, based on the projected price movement in the forecast data. This strategy combines the bearish trend, the support break, and the RSI indicator to identify a potential shorting opportunity. The stop-loss order provides a safety net, while the target price aims to capture a significant portion of the expected downward movement. It's important to note that this is a single scenario analysis, and further research and risk management are crucial before executing any trades. Based on the provided historical and forecast data, Chainlink appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, with a forecast indicating further downward movement. The RSI indicator also supports this bearish outlook, hovering below the $50 neutral level for most of the period. Considering these factors, a short position could be considered. A suitable entry price for a short position would be around $15, with a stop-loss placed at $15.50 to limit potential losses. The target price could be set at $12.50, based on the forecast and the support level of $13. This strategy utilizes both the price trend and the RSI indicator to identify a potential short selling opportunity. Based on the provided data, Aave appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the price dipping below the support level of $156. The forecast data further reinforces this bearish outlook, projecting a continued decline in price for the next week. Considering these factors, a short position is recommended. A suitable entry price would be around $175, based on the forecast price of $169 and the potential for a slight bounce before the downward trend resumes. The stop-loss order should be placed at $185 to limit potential losses. The target price is set at $145, aiming to capture a significant portion of the projected decline. Based on the provided data, EOS appears to be in a downtrend. The historical price data shows a consistent decline, supported by the forecast data which predicts further downward movement. The RSI, while fluctuating, remains below $50, indicating bearish sentiment. The Bollinger Bands are also converging, suggesting a potential for a breakout in either direction, but the current price action favors a downside move. Therefore, a short position is recommended. Enter a short position at the current market price of $0.535. Set a stop-loss order at $0.569, the recent high, to limit potential losses. The initial target price is set at $0.457, the strong support level, with a potential to extend the position further down to $0.455 based on the forecast data. Remember to manage your risk and adjust your strategy as the market evolves. Based on the provided data, Tron appears to be in a sideways trend with a slight upward bias. The historical price data shows fluctuations within a range, with support around $0.222 and resistance at $0.244. The RSI indicates a neutral sentiment, hovering around the $50 mark. The Bollinger Bands suggest a narrowing range, indicating potential for a breakout in either direction. Considering these factors, a potential strategy could involve a long position with an entry price around $0.235, close to the forecast price and the midpoint of the historical range. A stop-loss order should be placed at $0.222, support level, limiting potential losses. The target price could be set at $0.244, resistance level, aiming for a potential upside of approximately 4%. This strategy aims to capitalize on a potential breakout to the upside while managing risk by placing a stop-loss below the support level. Based on the provided data, Suncoin appears to be in a short-term downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the price falling below the $20 day moving average. The forecast data suggests this downtrend might continue in the coming week. Therefore, a bearish strategy is recommended. A suitable entry point would be around $0.0168, near the recent lows. The stop-loss order should be placed above the recent swing high at $0.0178 to limit potential losses. The target price could be set at $0.0160, aiming for a 5% decline. This strategy leverages the downtrend and the RSI indicator, which is currently hovering around $35, indicating oversold conditions. The Bollinger Bands also support this bearish outlook, with the price trading below the middle band and approaching the lower band.